Testing, testing, testing. 1, 2, 3, 4. Hello, everyone. This is your market update for Monday, May 12th, 2025, starting with this week's economic calendar. Tuesday, we're going to get some CPI data and core CPI. April CPI headlines expected at 0.2% for the month for an annual run rate of 2.3%. We'll see where that comes in. Then Thursday, we're going to get retail sales as well as core PPI for the year. We'll see what happens there. I think Fed Chairman Powell is also going to speak on Thursday at about 8:40 a.m. And then Friday, we're going to get housing starts and building permits. Over to the headlines. Got some big news here. It says U.S. China to slash tariffs during a 90-day reprieve for talks. So this is giving the markets a little bit of a breather here. It sounds like the combined 145% levies on most Chinese imports will be reduced to 30% during this 90-day window. And the 125% duties on U.S. tariffs will drop to 10%. So this is a big relief to markets, and we're seeing gold back off a little bit here now that we have some clarity. Over to the FedWatch tool. This is making the probabilities for rate cuts even worse. So right now, the odds for a June rate cut, I mean, they're almost 90% that there will not be a rate cut in June. July right now, 52% chance of no rate cut in July. So right now, it looks like the next rate cut might be in September. And again, it's been my assumption that the lack of rate cuts is probably going to help the stock market roll over here sometime in May. Over to gold, currently trading at $3,226, down 3.52%. We are back here, pretty much back to the May 1st low. That level was $3,209. If we get a couple closes below that, that would confirm an intermediate cycle top here on April 22nd. And we got support at the 50-day coming in. But right now, it looks like this clarity over tariffs is taking some of the bid out of gold. And I think this is where we could start to see prices begin to slip lower. We'll see if prices take out 3,200 and the 50-day EMA does not hold here this week. We could see prices begin to slip down towards 3,000 rather quickly as some of the leveraged players, I think, exit the market. Over to silver, currently at $32.42. Prices are holding up rather well, only down 1.5% versus gold's 3.5%. So that's good. The gold silver ratio still around 100, just under that at 99.83. And I think silver probably will hold up better during this decline. But overall, if gold goes to my $2,800 target, I think at a minimum, silver is going to come back to retest probably the April low. But there's still a chance we come back to around $26 before everything is said and done. And then again, I think we'll probably see a breakout above 35 maybe later this year. That's my guess right now. Platinum currently trading at $976, getting a large outside reversal day. Prices tried to break the uptrend line. They couldn't. Didn't really get progressive closes above 1,000. So it looks like prices are reversing now, and we're going to head lower. And again, if gold hits my $2,800 target, I think platinum will probably come back towards the 800 level, the low 800 range, before we see a significant bottom. Over to gold miners, GDX finished Friday up a little over 3%. Right now, prices are scheduled to open a little bit below $48, so we're going to have a significant gap lower. Price support here at this gap at 47. I think this is eventually going to fail. We have the 50-day EMA right now coming in at 46.33. Could see support there. It's held support near this level the last few times. Eventually, it's going to break below it. I don't know if it'll do it now. It's getting pretty late in this pullback. But we'll see if prices hold the 50-day EMA. If not, and if gold slips towards 3,000 here, before the end of May, then I think miners could come back down sharply, maybe back to the 43 level before we see the next bounce. We'll just have to keep an eye on that. Over to crude oil, currently at $63.40, up almost 4% right now. We're going to see what happens here. We had this breakdown below 65. We retested it. We came back. It looks like we almost have a double bottom here around $55. If we get a couple closes above 65, I think that could send prices back up to the 72 level. And that would support crude oil and energy stocks. Over to the S&P 500 futures up 3% on this news, significantly higher. Right now, they're above the 200-day moving average, and we're going to see what happens. It's kind of make or break time for my outlook. Again, we've continued to track the 2022 breakdown very closely, and we're going to see what happens here. If prices begin to roll over here, possibly this week, then this could be the end of this rebound. Again, I'm under the assumption that this is a bear market rebound and that prices are going to come back down to test the April lows here by mid-year. But if they don't begin to roll over here soon this week or at the latest by the end of May, then I'd say that analysis is probably wrong and that prices probably put in a more significant bottom here in April. But right now, we're just going to have to see if we begin to roll over and if we do, then we could be back towards the 49 to 4,800 level here by mid-year, maybe July, possibly August. We'll see. Something to keep an eye on. Definitely interesting price action here. And then lastly, over to the 10-year Treasury yield, currently at 4.46%, up 1.80%. This is interesting. I think the lack of Fed rate cuts and a higher Treasury yield is probably going to be the medicine that turns the stock market lower. We'll see. But right now, we had this the tariff news here in early April. Yields shot higher. This is a strong, impulsive move, and it looks like we have kind of a ABC correction. So we have a higher high and prices made a higher low. And if yields continue and they take out the 4.6 level here from April, that would be another higher high, and that would reinforce an uptrend in yields, which I think would be bad for the overall market. The Treasury still has a lot of debt it has to reissue this year. And if we break out above 4.6 in the 10-year, I think markets are going to start to get spooked. So I'm keeping an eye on that. And I think that, as well as the Fed not cutting rates anytime soon, will probably be the next thing to send markets lower. So that's it for now. Have yourself a wonderful week, and we'll talk to you later.